France has reportedly charged two former top executives after a long probe into the 2002 sale of Scorpene-class submarines to Malaysia. Citing sources, AFP reports they are the former chairman of DCNI, Philippe Jappiot, and former chief of Thales, Jean-Paul Perrier. DCNI is a unit of French naval dockyards, while Thales is a French defense and electronics multinational firm. According to the AFP report, Jappiot has also been indicted for abuse of social assets and Perrier for complicity in abuse of social assets. France initiated the investigation following a complaint by Swaram in 2009. The human rights group alleged there was an element of graft in the purchase of the $1.1 billion submarines and that it involved illegal kickbacks of over 516 million ringgit to a purported shell company linked to Abdul Razak Baginda, said to be a close associate of then Defense Minister Najib Razak, and a man in the center of a probe into Mongolian translator Atantuya Sharibu's murder back in 2006. Both Najib and Razak have denied any wrongdoing. CIMB Group Chairman Nazir says Putrajaya should scrutinize Chinese-led investments, particularly the East Coast Rail Line or ECRL. The veteran banker says the 55 billion ringgit deal should be thoroughly scrutinized and that we should stop getting excited over everything that is large and sexy, as it is very dangerous. While he doesn't question the benefit of having the ECRL, he says the government should not just look at it in terms of investment scale, but also the value proposition. He also asked if Malaysia is generating enough tax revenue to cover the project's loan repayment. Nazir is now urging the government to review negotiations with Beijing to ensure that Malaysia doesn't get the short end of the stick. He's also calling for MITI to come up with a measure to take into account the value of upcoming Chinese-led investments in the country. Prestariang is planning to raise about 1 billion ringgit through sukuk and direct term loan to fund the National Immigration Control System or SCIMB. This is after it secured a 15-year concession agreement from the government yesterday. Its chief Abu Hassan Ismail is confident that Prestariang is able to raise the money quickly as it is a concession business with an assured payment from the government. He says raising money through private placement and rights issue isn't an option as they would take a longer time. Prestariang announced it inked the 3.5 billion ringgit deal with the Home Affairs Ministry yesterday. The project is a new border control system to replace the current Malaysian immigration system. RAM rating said about 5 billion ringgit is needed to expand Kuantan Port, Sepanggar Bay Container Port and the Port of Tanjung Pelepas. RAM's co-head of Infrastructure and Utilities Ratings Davinda Korjil says the figure may swell to over 250 billion ringgit if big projects like the third Port Klang at Carry Islands and the Malacca Gateway projects take off. She expects throughput growth to remain in the low single-digit levels, similar to the modest 3% seen in 2016. All in all, the container and cargo handling prospects of Malaysian ports are likely to remain healthy in 2017 in tandem with gradual global economy recovery. She says prospects for the key national ports including West Ports, North Port and Pelabuhan Tanjung Pelepas remain stable, but in the short term, they are still vulnerable to the effects of the current trend towards protectionism and changes in shipping alliances. She adds that Malaysia continues to benefit from its strategic position along the Straits of Malacca, one of the busiest shipping lanes in the world. Maybank IB Research expects IOI Corp to deliver its strongest quarterly headline net profit of about 500 million ringgit in its fourth quarter ending June this year, though this should not be a big surprise to the market as the numbers are expected to be within expectations. For its 9 months ended March this year, IOI saw a net profit of 426 million ringgit. The research house believes the strong 4Q earnings will be partly boosted by unrealized forex translation gains estimated at 200 million ringgit. Without the forex gain, Maybank Research expects core net profit to come in at about 300 million ringgit, lifted by higher crude palm oil average selling price and recovery in fresh fruit bunch output. This will bring its full-year core net profit to 1.12 billion, which is within its estimates. It is keeping a whole call on IOI Corp with an unchanged target price of 4.40 ringgit given the lack of catalysts.